Do you ever feel like stock charts look like ancient hieroglyphics? Like some secret code that only Wall Street wizards understand? Well, today I'm handing out the decoder ring because once you crack this, you'll see opportunities where others see chaos. Let's go. When I was a kid, I always thought that treasure maps would always lead me to gold. But it turns out, they actually do. You see, stock charts are like modern-day treasure maps. But instead of X mark the spot, we have candlesticks, trends, and support levels. At its core, a stock chart is just a visual representation of price movements over time. And there are two types of charts that dominate the game: the line charts and the candlesticks. Line charts, the long-term investor's choice. Line charts are used more for fundamental analysis. It shows the closing price over time with a single line. And this is great for seeing long-term trends and how a stock performs over months or years or even decades. It's used by investors who focus on the big picture, like Warren Buffett-style fundamental investors. Why? Because when you invest based on fundamentals, you're buying a stock for the long haul. In real estate, it's almost like you're buying a house to live in. Think about it. If you're buying a house to live in, you care about the bedrooms, the yard, the details. You're looking at how well it's built because you're going to be in it for a long time. Line charts help fundamental investors see that long-term vision. Candlestick charts, the trader's weapon. This is used more for technical analysis. Each candle shows the open, the close, the high, and the low for a period of time. Great for spotting trends, momentum shifts, and price action signals. This is used by short-term traders who make quick moves based on chart patterns and market psychology. Why? Because when you trade using candlesticks, you're not interested in holding the stocks forever or long-term. You just care about the price right now, the volume, the float. It's like wholesaling in real estate. In wholesaling, you really don't care much on how pretty the house is. You just want to know how much you can buy it for. How much are the houses selling in the area, and how quickly you can sell it for a profit. Candlestick traders think the same way. They don't really care about the company's long-term vision. They care about price movements and how to profit fast. Part 2, trends and market sentiment. Let's talk about trends. Uptrend, buyers are in control. Downtrend, sellers are winning. Sideways, it's indecisive. Like that friend who can't pick a restaurant. And now let's talk about volume. High volume, a lot of people are trading. That means something big is happening. Low volume, traders are watching from the sides, waiting to make a big move. Let's talk about candlesticks. The body tells you how far the price have moved. The wicks or shadows show how high and how low it went. A green candlestick means the stock closed higher than it opened. And red means it closed lower. Alright, let's talk about candlestick patterns. Because these little guys are like mood rings for the stock market. They tell you when buyers are excited or when sellers are panicking. Bullish patterns, price might go up. We got the hammer. It looks like a tiny body with a long lower wick. Signals a reversal from downtrend to uptrend. Imagine the stock getting punched down but bouncing right back. And then we got the engulfing pattern. A big green candle swallowing a small red one. Buyers just overpowered the sellers. And then we have the bearish patterns. We have the shooting star. Looks like an upside down hammer. Price went up, then crashed back down. This means sellers jumped in hard. And then we got the bearish engulfing. A huge red candle swallowing a small green one. Translation, sellers took over. We have a sell-off. When you see these patterns, think of them like a warning bell. They don't guarantee price movements, but they give you clues on what might happen. So let's put all this into action, huh? Here's a real chart. Notice the hammer here. Right after that, the stock market shot up. And here, that's a bearish engulfing. Price dropped soon after. Alright, charts don't predict the future. But if you know how to read them, you'll start spotting opportunities that most people miss. And that, my friend, is how you start winning in the stock market. Next episode, we're talking about key trading indicators and metrics. So for more investing, finance, real estate, and macroeconomics, let's all learn wealthy together. I'll see you in the next video.